Good afternoon, everybody. It's May 23rd. Closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we take a look at all the closing action from today. And we had the markets, churning to the upside. But what's interesting here, folks, is on lower than average volume on both New York and NASDAQ. So when you take a look at the Dow Jones Industrial, you see it was up 43. That's good for 0.2%. 20,937, again, below that 21,000 level, but not a ton of conviction, just grinding there all day long. S&P 500, same thing. Finished below that 2,400 level, but you can see clearly that it was in a very tight range today. It is above the 20-day and 50-day as well as the 200-day moving average. So the short-term, long-term, and intermediate-term bulls still in control, but not a ton of conviction. Good for 4 points to the upside on the SPX cash. Looking at the NASDAQ 100, finished the day at 57.03. That's good for 4 points to the upside. Nominal. Large cap tech was under pressure all day. Apple, Facebook, Amazon, Priceline. There just seemed to be pressure with large cap tech. You did see that the Russell 2000 challenging its 20 and 50-day moving average, right? They consolidate right here. This domestically centric index, as I've discussed, needs that catalyst. It needs the reforms that are discussed ad nauseum here in the States, but nothing has been done. Bottom line is we're going to watch the data. The new home sales came out today. That was the biggest piece of data. They disappointed. Came in at around 569,000. With that being said, we're going to watch existing homes tomorrow. That's about 90% of the action anyways as far as home sales are concerned. And we're going to see how that number comes out because that's going to impact the likes of Lowe's, Home Depot, and so forth. As a matter of fact, we talked about Lowe's. They're announcing earnings tomorrow morning before the open. And when they announce existing home sales, we could see some fireworks in that sector, in that space, as well as those names. Crude oil, been bouncing to the upside. Since we've seen the dollar weakness, did firm up a little bit. We'll talk about that in a moment. But also the anticipation of further continuation of OPEC production cuts and potentially deeper cuts and longer term. But with that being said, a very strategic type of release from the White House today, where they were announcing that they may release and sell off half of the Strategic Petroleum Reserve, which would raise about $16.5 billion. Very interesting. West Texas, the contract that we're looking at right now, did not pull back. As a matter of fact, trading right where it closed, right around 51.52. I have not seen what the API data is. The American Petroleum Institute, we're looking last week, they had a slight build of about 900,000 barrels. The EIA report will be out tomorrow. That is more of a market-moving report. We'll watch that very closely tomorrow as far as whether there's a draw or a build. If there is a build, this crude pop could have a short-lived type of life. In full disclosure, my clients do have a position in the crude contract. Taking a look at the Brent contract, which is more focused on what is coming out of the Middle East, we'll watch on the 25th of May. That is going to drive the Brent contract. Any discussion, rhetoric, or whatnot that's going to come out of that meeting as far as are they going to extend production cuts 6 months or 9 months? In other words, get into March of 2018, and will they cut them even deeper? In other words, go beyond the 1.8 billion that they've been cutting on a daily basis, or million barrels a day. Will they cut even deeper, going beyond the 1.8 million barrels that they've already been committed to since basically November, December of last year? Taking a look at the dollar, you're seeing a decent rebound off of the lows, but still well below the 100 level and below 98. It's been in a downtrend for the last week and a half to 10 days, so we'll watch this very closely. Any strength in the dollar is going to put pressure in commodities. So unless there is big economic data that comes out, both domestically here in the States and globally, and we did see some pretty decent CPI and PPI data that came out showing inflation in the Eurozone this morning. We talked about that this morning at 8:45 Eastern time. But the dollar is firming up. That's putting pressure on currencies, and it should put pressure on the commodity markets, it did put pressure on gold. Not only the safety trade, but the pressure of the dollar did have that shiny metal pullback. You take a look at GC or GLD. The bonds moving to the downside. The latest auction on the short end of the curve, 2-year, saw very little interest. The 2-year, the 10-year, and the 30-year all down. But what's notable here is that despite the price action to the downside, we did not see a big yield pop, especially in the 10-year yield. It did get up to 2.28%, but it's still below that 2.3%. And again, when you look at something like utilities, we talked about this in Strategy Now, the XLU has a dividend of 3.5%. You're talking about basically 1.2% more than the current 10-year that's being represented in the XLU. You actually saw that XLU, this counter-cyclical sector, which is utilities, this is the ETF that tracks it, was actually up 14 cents or 0.25% today, and it continues to move to the upside after hours. So very interesting action that we're seeing today in some counter-cyclicals. So you can look at the likes of Duke Energy, NEE, as well as Southern, all to the upside today. All right, folks, that's it for the closing bell. I want you to join us tomorrow. We'll be online early in the morning. We're going to take a look at Asia, Europe, and hear what's going on in the United States. So we'll see you here at MarketStream.live. Have a good night.